at this point of time what's happening in the US and China, or what's the kind of impact you think on Indian economy?
Infrastructure is going to be the key driver of our economy for quite some years. You take 1 year money and try to wrap it as 15-year money, somebody is going to hurt sometime. I think banks are not the optimal choice for long-term lending.
What happening? You are seeing a structural shift in the entire financial architecture?
Anybody who can use a WhatsApp basically will be able to see what has happened to his investments periodically. But so who are the people who have lost it and where did that money come from? That has come from the unsecured loan market.
So last day, last show, Kundapur Bhaman Kamath. 1996 you took over. I know you for quite long, sir. But it's not a stage for personal story. So I will quickly get on to my business. You are the BRICS Bank chairman, and a lot of things are happening. I'm not talking about US elections. I'm talking about China is a part of BRICS as we speak. That in media now, the news flowing that the huge stimulus package second time and all. And everybody in India, apart from US, the second thing, particularly from the market point of view, discussion is about China. So tell me, you have the experience because you headed BRICS Bank. So tell us at this point of time what's happening in the US and China, or what's the kind of impact you think on Indian economy?
Thank you. Thank you, Tamal. I can give my perspective on what I think is happening in China. I have not been to China for the last 4 years. My own assessment is that their growth, accelerated growth period, where they transformed themselves, was from the year 2000 to 2015. And thereafter, I think it's natural that growth slowed down. So I would guess that what they're now trying to do is to stabilize growth at a new peg, as it were, from a double digit to maybe they're looking at a 5% or so. And if they anticipate that growth would be below that level, I think they're trying to support it. And that's what we would see in the stimulus that they have just given. Because to all intent, with an 18 trillion economy, even if you grow at 5%, that's a large addition to growth. So they are on their path, and they run it differently from what we do. They have been on a very low interest base for a very long period of time. So deposit rates are around 2.5%, lending rates 4.5%. So they have their arithmetic, as it were, to grow. And I would think that they will grow at 4.5%, 5% without too much trouble. The US is new president, and we'll have to wait and watch what is the policy change. The markets in the US have given it a cheer. So let's see what follows.
Mr. Kamath, as Shailesh said, till recently you were the chairman of NAFED, is the India's first, I would not put first because IDFC was a earlier experiment, 1997 budget spoke about that, but NAFED is the newest animal for infrastructure financing, and you saw it from very close quarters since its inception. I think 2021 Nirmala Sitharaman budget spoke about NAFED. That's how we got in. Raj Kiran is heading as an MD and all. So tell us that this infrastructure financing, what's happening there? I mean, we don't, banks would continue to do, or you need an institution like NAFED and others, they can take care of that. What's the demand supply gap? Because bulk of the NPAs that happened in the last decade, 2014-15, which Raghuram Rajan started cleaning up with the asset quality review, AQR, was banks' exposure to infrastructure.
Yeah, no, let me put that in context. It was actually, if you look at, there were three pioneer institutions going back 75 years, and that is IDBI, IFC, and ICICI. And we had to metamorphose into a bank because at that point in time, our access to funding was blocked. So we had no access to funding. So we became a bank.
Initially, you had that soft loan kind of government.
It's not a soft loan. It was a government guaranteed.
Yes.
You could issue a government guaranteed bond, which was eligible as an SLR security.
Yes.
So banks would put money into us. So basically, it was the appraising expertise of these three institutions which was put forth. But then you had a situation of newer banks being experimented, infrastructure banks being experimented with. But those again came about at a time when funding was not available. Cut to today, infrastructure is going to be the key driver of our economy for quite some years. And you have a situation where banks, commercial banks, are lending 10 and 15-year money for infrastructure, where their own liability profile is 1 year. So you take 1 year money and try to wrap it as 15-year money, somebody is going to hurt sometime. And then you reprice it every 3 months. So you had a very unstable
asset liability mismatches.
So from that point of view, the government's idea of setting up NAPFID was absolutely timely and absolutely correct. The one major change that happened between 96 and now is you have got a robust insurance and pension fund industry, which has needs for long-term deployment of cash. So there's a capital market process through which this can be borrowed, and that's what NAPFID would do. I would think that NAPFID will grow in scale, and there will be more such banks coming up to lend, because I think banks are not the optimal choice for long-term lending of 10 and 15 years for infrastructure. They can take shorter maturities, but the longer maturities would probably left to what I call the market process.
Mr. Kamath, the last 3 days we have been talking about whether it's Reserve Bank of India governor or chief economic advisor, government of India, whether the banks, the other side of banks' balance sheet, the left side, we're talking about the deposits, the so-called, credit deposit ratio, pretty high, RBI is concerned and all. And the related part is this, the growing financialization, like the savers are actually turning investors. So you have seen, not too many people have seen the banking industry and overall Indian economy, financial sector as closely as you through different roles. So what happening? You are seeing a structural shift in the entire financial architecture?
Yeah, I think it's a slow shift, and there are a few more elements to it.
Please.
One is technology. So you have technology, greater access, and a better understanding of what opportunities are there. I think this is what is making this financialization of savings. And Tamal, that had to happen because a saver would like to have a better, higher rate of interest or a higher earning on his financial assets than what is at present. And earlier on, that opportunity was not there because that saver, I'm talking of, let us say, below the affluent category, the mass affluent category, would find it difficult to actually access these products. With technology, access to these products has become simple. And with SIP, it became even simpler. And now if SIP size, the amounts on the SIP are brought down even further, you will see a further boost. And add to that something like MF Central, which anybody who can use a WhatsApp basically will be able to see what has happened to his investments periodically. Otherwise, he would have had no ability to look up what exactly is happening to his investments. So it stayed in a bank. So I think the financialization of savings has been propelled by technology, development on technology. However, that's only one side of it. You were asking, is there a shift in deployment? We should also, I think, reckon what the Reserve Bank governor in particular has been talking about the risks in terms of operating in markets in a way that you ought not to be. That is, you have lay people getting into the F&O side. And on one side, you had the SEBI chairperson say that that's 90% of the people have lost money. And the back of the envelope calculation will show you that that amount is more than 150,000 crores, 1.5 lakh crores, maybe probably 1.7 lakhs if you gross it up properly.
In the FNO, the losses the individuals suffered.
Yeah, and there are X number of parties who had the skills to operate in this market who have made the money. But so who are the people who have lost it, and where did that money come from? That has come from the unsecured loan market. And that is why I think the Reserve Bank of India is right to caution on unsecured lending and end use of money that is borrowed from providers of funding. Because if you then loosely use it, it is going to not come back to you. And that's the situation just now. Because you have monies which have been put into or lost in the F&O market. So financialization is good, but I would think rash activities are not good. And that is what the red flag is being raised by both regulators.
So you are one of them who believe that money is getting to the stock market, all this personal loan, unsecured loan, etc. Because RBI, I asked the same question to RBI governor, and he said that Reserve Bank of India had undertaken a study, but the sample size is not that big, and he did not want to reveal much. But he said that RBI is keeping a close tab. It has done a study, something. But you are seeing that it's happening actually, money leaving the banking system and getting into the markets through this unsecured personal loans?
Tamal, let me ask a question. If hypothetical question, if people are borrowing at 20-25%, and the lender says that my NIM is 10%, which means that the lender is prepared to lose that money. And tell me which business or which activity that I as a lay consumer can do, which will allow me to cover a 20-25% funding cost and then make money and then repay it. I can't think of something as a banker. So given to me, this is primarily going into some sort of speculative activity or some sort of consumption, which it would be for me a little difficult to understand that you will borrow at 25-30% and consume. So it is going to some activity which ought not to have been. So while anecdotally you do not know where it has been burnt, but the fact that you have looked at, and the number, this number that I mentioned, 1.5 lakh crores, is what I got my colleagues to run. They ran the numbers, and that's the number that they came up with. So at least that amount of money has been burnt, as it were.
At least 1.5 lakh crore, 1.5 trillion people have lost money in stock market, and bulk of it has come to them
unsecured,
in the form of personal loan, unsecured personal loan, or the entire money.
I would think entire money.
Entire money, 1.5 or 1.7 trillion, you are saying, lost in the market has come through this route. So Reserve Bank of India actually has done the right thing by raising that.
Absolutely right in raising a cautionary flag 6 months back on unsecured lending, 25 bips hike in risk weightage, and cautioning the lenders. And cautioning the lenders to to determine what is the end use before you lend. So this, I think the Reserve Bank has put very clearly, and I would commend the Reserve Bank for doing this, because this is just about time that we get control of this.
And how do you see Reserve Bank of India's latest action? Because you are praising RBI, which not too many are this thing that about RBI's clamp down on personal loan, unsecured loan. What about RBI's clamp down on NBFCs? That 4 NBFCs
I would think
ceased and desist order.
It is in the same order, the same vein. Because if the Reserve Bank doesn't do it now in an environment which is changing, because here again there is technology at play. There are several things at play, and the regulator is taking action, understanding what is happening with use of technology, with the laxity in certain processes, and the consequences of that, which could be very difficult for a regulator to then, in a way, address. They are taking, I would say, proactive action.
Taking this conversation forward, Mr. Kamath, do you see crisis is a very strong word, but what's your comfort level as far as the NBFC sector is concerned? Because we are hearing contradictory thing that most of them are good, only few rotten apple are there. That's one point of view, and RBI has overreacted. Another point of view, no, actually there's some problem is brewing in the NBFC sector, and which RBI has been talking about, the push factor. The loans are not giving to the deserving people. Actually, they are flooded with money. Banks are giving money to NBFCs, and NBFCs are flooding money. They are encouraging over leveraging, and there are people who have taken 6, 7, 8, 10 loans, credit bureau, etc. exist, but doesn't make much of sense. It's a kind of mess. So what do you see in the NBFC sector?
See, let me put that in context, and we can then say, action, as I said, I believe there was what action has been taken is absolutely warranted. I asked one of the credit scoring companies about 6 months back or 7 months back, a casual question. The CEO was with me. I said, at what score are fintechs lending? The score indicator was 550. 550, whereas a typical banker would say 750, maybe 700. So he saw the shock on my face. And he said, each borrower has 5 loans. And he didn't stop there. And he says they're still looking for more loans. So to a banker, what does this mean? That the borrower took the first loan, he couldn't repay it, he took a second loan to meet maybe interest payments, he took a third loan to repay installment, he's taking a fourth loan to do something else. So this is a pyramid that is being built. And just about then was when Reserve Bank, I heard, Reserve Bank said, raise the risk weightage and put out a cautionary flag. So they were right in time when they would have also heard from the market that this is what is happening and their own sources. Now don't ask me where is this debt sitting. The good news is, this could be there somewhere across the system. The good news is, I think the banks are at this point in time healthier than ever. So if you look at this last quarter's numbers, if you look at the top 4 banks, I think the ROEs are between 16, 17% to 20%, almost 20%. Unheard of. I have not seen ROEs of 20% in banking. So banks are running a very healthy book. So I don't think there is any systemic worry that I would have at all. But systemic caution that the Reserve Bank has expressed is entirely warranted.
So the mischief is being played by the loan apps. They are the primary mischief makers, you are saying?
Yeah. So I would think that I would use a word, and I would use it very with responsibility. You can abuse technology. So I think there is some sort of abuse of technology that is happening, and as a result of which, there is laxity in the whole process of lending.
Okay. Mr. Kamath, that's taking forward what we started talking about, the financialization, savers turning investors, banks are not getting deposits, because I am aware of certain people who used to keep good money in savings bank account. Now they're shifting it to arbitrage funds. They're saying that no, the tax advantages there and liquidity is as good as almost this thing. So in this kind of scenario, do we see a structural shift like the developed markets happening there, like is the developed market scenario, whether corporates will have to borrow money from the market, banking is not the only source. Is it the kind of thing you are seeing?
Tamal, that is already happening. See, we have a robust capital market today, and companies are starting to access funds. Now, we may say, where will the differentiation bifurcation happen? As I see, long-term capital needs of a corporate, if they cannot be met by their own cash accruals, and increasingly most corporates can meet it by cash accruals, they will then access the market to raise a bond. That would be the most efficient way to do it, of the right maturity, so that they don't carry a mismatch. So I see that happening in a big way. The second thing that we need to reckon is the outcomes of creating InvITs and REITs, so that what otherwise was being funded by the banking system, today somebody would have borrowed, but the next round, it is now coming through the InvIT process and through a capital market process, where the capital market is actually funding this activity. And that is to common good. If you look at a good example would be NHAI. I think the InvITs that they have created is, to me, it paves the way for very many things to stabilize a business, to have cash, throw up cash, and then get that business into an InvIT, and it becomes self-financing in a way, so that your next round of funding can be done through cash that was released from the InvIT process. So to me, there are excellent, I think, developments in that area, and the capital market will be a strong pillar in support of development parallel to the banking system.
Well, talking about corporate India and REIT and InvIT and all, so we are going through the earnings season, almost coming to an end. How do you see the corporate performance? Because we have been talking about, there is pressure, and that's reflection also in the stock market, FDI outflow, FII outflow continuously.
Yeah. See, I would not be too worried about the FII outflow. These are, I would leave it to the market experts to talk about that. I would be looking at corporate earnings as the key, and ultimately the market is a function of how efficiently your constituents are functioning. So in that context, if I look at current quarter's numbers, and I now do it as a hobby, it's not my profession anymore. What is it? Out of 1,500 companies which have listed, out of the 4,000 companies which say one of the people track and report on a continuous basis, see top line growth of around 8%, bottom line virtually flat, 1 or 2%. So that I think indicates that there is some pressure on the system, which I hope gets resolved.
Coming back to the bank's health, is there anything the stress that we are discussing about, is it confined to NBFCs, or you see the stress in banking sector also? Because what we understand is this stress of unsecured loan, it has affected banking sectors too, but particularly the private banks are pretty fast to write off loans, so it doesn't get infected in their bad asset number, etc. But the best time of the banking system, I think that cycle is changing.
Yeah,
do you think that way?
I can't comment on whether that pain is
because
felt
you did
by
say
whom.
about a year back that what banking system in India now you see is the best ever in the past 50 years.
Yeah, I will still say that. So that's the reason I can't say whether I'm yet seeing the pain that you're describing. Probably it is there, but I will put it in a larger context. Any lending activity goes through cycles. So there has to be a cycle, and there will be pain at some point in time in that cycle, whether through retail or the corporate side. But as of now, if I look at this quarter's numbers, I am not seeing that, whichever way I analyze it. Because you can look at the credit losses by looking at the provisioning number. I am not seeing a jump in provisioning, a significant jump in provisioning of banks. I have not analyzed the NBFCs. So I think the banking sector, I would still say that it is as good as it has been, probably the best it has been over 50 years. I have tracked.
You don't see new cycle changing?
I don't see that just now.
You are a great believer in data, right? Every time in our even conversation you said that this is the new, I don't want to use the cliche that data is the new oil, etc. But you think that every business, particularly the banking and finance business, will be started being data driven. But the other side is the fraud and everything else, and the data privacy. Recently we heard about one insurance company's data leaking, data being sold, etc. So, and then the act on data is still, we have been waiting for quite some time. So what do you see in this entire data space?
There are two questions that you have asked. One is on fraud, and the second is on data privacy. I will separate those two.
Yes. Because you have been continuously saying that every credit action has to be data driven.
Yeah, so if you look at fraud, really, just now what we are seeing is technology driven fraud. We call it cyber crime, but to me it is technology driven fraud. So how does that happen for a bank? It happens for a bank to a bank when the bank is unable to understand what could the fraudster do using technology. So there's a learning curve. Now, will you be ever ahead of that? You have to get ahead of that to survive. And this has been, I've seen that not now, even from the days of credit cards, when we first got into it, there is a set of fraudsters who will try to game the system.
But it's reached such a level where our Prime Minister is talking about in Man Ki Baat, talking about the frauds.
Yeah, so to me it's a serious issue. And collectively the system, the technology-driven players, whether banks or others, will need to get on top of how to contain the fraud. It is not going to take long. It will happen, because I think it is reaching a level where people now will have to apply their mind how to resolve this. So that will happen. Your second point was on what?
Using data to the bank's advantage.
Data. You see,
for
there
credit.
again, there's something very I see something which is which will be corrected. Today, if you look at particularly for certain products, for core banking products, deposits and the like, there is data with the banks. But then you go to products which are third-party driven. I well know that 25 years back, we originated the third-party structure because we did not have access to banks. So we had third-party distributors who did this. But today it has come to a situation where distributors are controlling data. And the institution which is actually in business is not controlling data. So to me, that also, now with technology coming to the fore, a correction has to be done, where people who are in business should make sure that they have access to their own data. Otherwise, they are in jeopardy.
Mm-hmm. A little back and forth. So you are saying that the bank's health is pretty good. There is no concern. Good times will continue. As we speak, State Bank of India's just earnings announcement, and it's pretty good and all. The government-owned banking system has gone through consolidation. Now we have, I think, including State Bank of India, 11 public sector banks and all. So there have been talks, and various economists and even an ex-central banker also has written thing that this is the right time for government actually to encash, because at the end of the day, government has no business to be in running businesses. So why not government take the opportunity and divest thing? So do you believe in that this is the right time for the government? I mean, not as we speak, because the past 3 weeks market is in a different mode, but yes, the right kind of valuation, public sector banking, public sector banks, and why not start the divestment?
Tamal, throughout my career, I have never commented on policy matters, and I don't want to start commenting on policy matters now. So it's for the government to take a policy decision on this. If somebody asks me, I'll say the banks are in great shape, and they can now stand on their own feet. That's all I can say, which is the truth. No, State Bank of India, I just did the numbers, 18,000 crore profit into 4, and then we gross it up for next year. We are looking at almost a 20% ROE, 20% ROE, and several other banks. I call them, they are an engine which is firing on all cylinders, and a perpetual cycle engine in engineering terms. It doesn't need to slow down at all, and doesn't need anything else. It doesn't need any other fuel. It is generating enough fuel to grow at whatever pace it wants to set. So I don't think the banking system today can stand on its own. It's a policy decision that the government has to take.
And the Finance Ministry also in the budget speech spoke about privatization, about 2 banks. IDBI privatization we have been hearing past 2 years. So any comment on that? I mean,
no, as I said, I won't comment on policy. I congratulate the banks, but both public and private sector, and public sector in particular, for their exemplary performance.
We are coming to an end, but just a couple of more questions. Mr. Kamath, that AI and ML, now everybody talks about that, how we ride on that, and that's a great time. But there's a lot of caution also. Reserve Bank of India governor recently said that if we don't use them rightly, it can even destabilize, it can create problem with the financial sector stability. So what is your take on user AI and ML?
Yeah, I think we have seen what are the dangers of using technology. The ability to, we used fraud as an example. But if, with rampant use of AI, which is going to be there, so we can't stop it. I will only put it this way, that the players in the system, banks or others, will need to be up on it to make sure that they know how to tackle this. So the burden goes up on the people who could be at the receiving end if they don't own up their own act.
Finally, there are a lot of talks that how technology is changing banking. So do you think we have reached a situation, or we are very close to a situation where a techie can run a bank, we don't need the bankers to run a bank anymore?
I'm a techie, no? I'm a techie. How can I answer that question?
No, tell me. What do you think?
I'm a techie.
Yes.
So how can I answer that question?
So techie can, techie can
the
run a
answer
bank.
is given. I'll put it this differently. A banker has to understand banking, and it is just not only technology. I was joking. It is, you have to understand the regulatory context. You have to understand the legal context. You have to take a 360-degree view. But I will say this, and I'm saying this in several of, when I'm asked to speak on several things, I end by saying that today the CEO will also have to be a technology architect. If he is not, I don't think he's going to succeed. So for the good of the institution, he will have to be a technology architect.
So knowledge of technology is essential, but it does not necessarily mean a techie can run a bank.
Knowledge and understanding and willingness to learn and make sure that his organization puts it in. He need not be a techie himself.
No, are you saying the same thing which Aditya Puri says that, well, I can have a Mercedes, but I don't necessarily need to know how to drive. I can have a right driver. So banker always can
this
say...
one, driving doesn't work.
This,
See, this is a game where in technology, it's a game where, particularly at this point in time, where there is evolution in technology, unless the CEO is willing to take a stand and say, my neck is on the line, nothing is going to happen. So you can't say that my driver is going to drive, his neck is on the line.
You also need to...
You will have to say, my neck is on the line, now do it.
Okay.
That's the only way you can do it.
Thank you, Mr. Kamath. Just last question, and absolutely choice is yours whether you would like to answer or not. I think all of us are eagerly waiting for geofinance, what's going to happen, when it actually take off, or has it already taken off, we don't know. If you want to say anything, sir, it's completely your choice.
You should ask the CEO, he will tell you. He will tell you, you should speak to him. Thank you.
So you'll not say, thank you. Okay, give him a big hand, please. Okay. Thank you, sir.